So joining us is Chance Finucane, Chief Investment Officer with Oxbow Advisors. Chance, great to see you. Thanks for coming on.
Yeah, thanks for having me.
Chance, we see a number of the major indexes hitting all-time highs recently. Has this surprised you, and are you restructuring your portfolios at all going into the new year?
We're not restructuring our portfolios. We take more of a multi-year outlook, sometimes even looking out 5 or 10 years, deciding what companies and securities we want to invest in. So we might make a couple of changes on the margin, but with this Santa Claus rally, what we're really seeing is some of the undervalued positions that we owned are starting to creep more towards their fair value.
Taking this approach, this longer-term approach, has it given you, how can I put it, has it restricted you at all? We saw some major rallies this year, maybe in stocks people weren't necessarily expecting. Do you ever feel tempted to dip your toe into these shorter-term rallies?
It's difficult at times when you see everything going up and you want to stick to your criteria. We're usually looking, for instance, in our equity portfolio, we're looking to buy stocks that we think can double over 5 years. But right now, there's not many opportunities like that. But it pays to stay disciplined and wait for those opportunities when they develop. And every now and then, it may not take much of a correction to see a few things develop where you are able to add some new securities into the portfolio.
As you mentioned, pretty much everything is going up this year. Are you still able to find value? And if so, where are you seeing it?
There are a few pockets where we've been able to find value. We don't mind holding some cash in our portfolios. So in our equity portfolio, we have close to 20 or 25% cash. In our high income strategy that's looking to generate closer to a 4 or 5% blended yield for those clients, it's closer to 30 or 35% cash. So we don't mind waiting for our opportunities. In terms of where we're seeing value in the marketplace, for income investors, we think there are investment grade quality securities in oil pipelines, some REITs that have 5% yields, and in some convertible preferred stocks. And then on the equity side, we like some companies in the digital payment space like PayPal, Visa, and MasterCard. And also think that a couple of names that have just fallen back on some other issues like Charter Communications and Booking Holdings as a reopening play have some value too.
Reopening, the market doesn't seem very concerned about the Omicron variant as we head into the new year. It seems like the market isn't really concerned about any news. It's always good news for the market, it seems. What are you looking at going into next year with regards to risks? Where are you seeing them?
I think there's two areas where we're focused on. First is continuing to follow this higher inflation that we're witnessing in the marketplace. We've got record demand for goods that has outrun the current supply chain capabilities. And whereas the Omicron variant appears to be less severe in impact on individuals in terms of hospitalizations and deaths, what you're seeing is with the higher transmissibility, you're going to see millions more workers having to stay home for a week or two, which could exacerbate that supply chain issue and keep inflation elevated longer than we might anticipate. So that's one area. The other one is looking at what is happening with some of this monetary and fiscal stimulus starting to rotate off, and the Federal Reserve actually beginning to raise rates and tighten. If you look back through decades of history, when the Fed starts to raise rates and try and tighten, they tend to go too far and create an economic slowdown or even a recession. So those are the two areas of risk that we're really monitoring in the next year.
You're not our only guest with that concern. Chance Finucane, Oxbow Advisors. Appreciate it. Thank you.
Thanks.